having like an identity crisis? Or is this some kind of 4D chess move impacting our portfolios? I mean, one day they're unveiling these huge AI breakthroughs, right? Making headlines everywhere. And then the very next day, boom, they slam the brakes on hiring in that exact same division. It's a bit of a corporate paradox, isn't it?
It really is. That's what we're diving into today. Welcome to D-Risk, a podcast where we provide a no-nonsense analysis of stocks. Today, we're taking a deep look at Meta Platforms, ticker Meta. We're using our research data from just before market open, August 26, 2025. It's a fascinating picture.
Absolutely. And just to set the stage quickly, the market vibe today is, well, a little cautious. Pre-market's pointing a bit lower. We've got these clashing economic signals, recession jitters versus decent GDP rebound talk, plus a whole flood of data hitting today. Durable goods, consumer confidence.
Yeah, lots to digest.
So the overall message as we look at Meta is maybe tread carefully today.
Good context.
Okay, so let's get into Meta itself. Our research really highlights this tension, right? Ambition versus anxiety. On the ambition side, I mean, wow, they are full steam ahead in the AI race. Our research points to things like that Midjourney partnership, pretty exciting for image generation. New AI features rolling out for Facebook, for Instagram, and even talk of, $800 smart glasses? That's the kind of stuff that gets Wall Street buzzing.
Oh, definitely. And Wall Street is buzzing. They seem to be buying that ambition narrative, hook, line, and sinker, almost.
Yeah.
Get this, 85% of analysts covering Meta, they have it as a buy or strong buy.
85%, that's huge.
It's a strong consensus. And their fair value math, based on free cash flow, puts the stock around $786 compared to where it is now, about $753 pre-market.
Yeah.
They're basically saying it's, undervalued.
Okay, 85% buy or strong buy. That's a commanding number. But if the street's so bullish, our research also found that other side, the anxiety piece, what are the analysts missing? Or are they just looking further out?
That's the million-dollar question, isn't it? Or maybe the 786 question here. Because despite all that AI excitement, you've got these internal memos leaking out, talking about a hiring halt,
right? A
major restructuring in the AI division itself.
Right, the same division making headlines.
Exactly, which clearly signals, push to control spending, maybe get more focused. It suggests maybe they're prioritizing AI that brings in revenue now, perhaps pulling back a bit from the bigger, fuzzier metaverse stuff for the moment. It's a more pragmatic feel than maybe the headline suggests.
Okay, so which story wins out? The unstoppable AI growth or this sort of quiet internal belt tightening? How are actual investors positioning themselves? Let's look at market sentiment.
Good idea.
The options market, well, it seems the bulls are still pretty active. That put to call ratio is sitting at 0.6.
0.6, yeah.
Meaning quite a few more bets on the price going up, right? Like 10 calls for every 6 puts.
That's right. And it's interesting where those bets are clustered. There's this huge stack of call options right at the $800 strike price. That acts like a potential ceiling, a big one.
Okay, $800 ceiling.
And on the flip side, there's a noticeable safety net forming around the $735 put level. And one more thing on sentiment short sellers. They're barely there. Activity's super low, just 1.16%.
So no big coordinated bets that the stock's about to tank.
It doesn't look like it, no.
Okay, so options paint a, cautiously bullish picture maybe. But sometimes the stock's actual price action, the technicals, its body language, tells a different, maybe more complicated story. What are the charts saying? Yeah,
complicated is a good word here. The technicals are definitely a mixed bag. Long term, the trend's still positive, no question.
Yeah.
But short term, that trend is actually broken down. It's stalled out a bit.
Stalled out.
Then there's volume. That's a bit of a red flag, honestly. More money seems to have been flowing out of the stock recently than flowing in. Suggests conviction is waning. And momentum is also losing steam. You can see downward pressure building up. And finally, volatility. It's actually quieted down. We're seeing a consolidation phase, meaning the price swings are getting smaller, tighter. It's like the market is pausing, undecided, before the next significant move. Indecision.
So the charts are basically shrugging their shoulders right now.
That's a pretty good way to put it, yeah. A very confused shrug.
All right, so putting it all together, the ambition, the anxiety, the bullish options, the confused charts, what's the playbook for today? Our research is landing on a neutral stance.
Makes sense.
It feels like a classic battleground stock, You've got strong fundamentals, positive sentiment from analysts and options traders, butting heads directly with these weakening short-term technicals, and let's not forget, that kind of nervous macro backdrop.
Exactly. It's a stalemate situation. So for today, the game plan involves watching key levels very closely. That major resistance we talked about, $800. That's psychological and heavy with options. A tough ceiling to break.
Okay, $800 up top. Down below, that key support, the option safety net, is $735. And the immediate tug of war. It's happening right around where it's trading pre-bell, about $752.
So watch $752 for the initial direction.
Precisely. A clear break above or below that zone could set the tone for the day.
So final thought then. Is Meta like a rocket ship just taking a pause to refuel before the next big launch? Or is that engine starting to, sputter a little? You've got analysts shouting, buy, while the charts are kind of whispering, maybe be careful.
That's the tension.
In this market, sometimes listening to the whispers pays off. That's all for this episode. Remember, this podcast is for informational purposes only and isn't financial advice. Always do your own research or consult with a qualified financial advisor before making any investment decisions. Thanks for tuning in, and we'll catch you on the next episode of D-Risk.